Hello and welcome. Thank you for joining us, everyone. We've had a huge response to today's webinar, Deadlines and Decisions for Accountants, Choosing Your Financial Advice Business Model for post-July 2016. Now, it's a panel discussion today. Our first of two speakers is Scott Charlton. Scott is a director at Fortnum Professional Strategies. Scott has a fantastic background for today's topic. He's been a successful practitioner in both suburban and CBD accountancy practices. He's built systems for accounting firms, and he has also been in the financial services sector, coaching both financial planners and accountants. And his area of expertise is in the relationship between accountants and financial advisors. So it's fantastic to have Scott with us today. The second speaker is Sue Viscovich. Sue is Managing Director and founder of Elixir Consulting. Sue's background is complementary to Scott's. Sue's background is squarely within the financial services sector, and like Scott, Sue is a published author and in-demand speaker around Australia. Now, if you've not met me before, my name's Michael Carter, or MC. I'm the founder of Practice Paradox, and I'll be facilitating today's discussion. At Paradox, we're all about helping accounting and related advisory firms know how to market and know how to sell, because it's not the best technicians that win, it's also the best communicators. What will we cover today? We'll look at what accountants can and can't discuss post-July 2016. We'll look at your options that you have, and we'll also cover a timeline between now and 30 June 2016. And both Scott and Sue will discuss the relevant points there. We'll finish off by looking at some action steps for you and also some additional resources that are available from each of us today. We're going to finish with question time, and we have actually already gone through the questions that many of you entered when you registered for today's webinar. So stay on board all the way to the end for question time. How do you currently service the financial planning needs of your clients? So the options are, we don't, they're on their own, or you have a loose referral arrangement, or you have a structured referral arrangement, you have a joint venture, or you do financial planning in-house. So actually, Sue and Scott, do you want to talk to the results that are on screen there? 10% say that they don't currently service their financial planning needs of their clients. 47%, so almost half, have a loose referral arrangement with a financial planner. 7% have a structured referral arrangement. Another 7% have a joint venture with a financial planner, and 29% do financial planning in-house. So the two big ones are loose referral arrangement, almost half, and up towards a third are doing financial planning in-house. Sue, your insights on that?
Thanks. Yeah, thanks, MC. Hi, everybody. Well, that's interesting. It's probably not altogether surprising. I guess the first thing that jumps out at me is a little bit of concern there that 10% of the accountants online don't take care of their clients in this regard at all, which I find concerning, because financial advice, if you're not a fan of it, I'd suggest find a great advisor and discover what real advice is all about, because many clients will benefit from the use of a great financial advisor, and if their accountant is not referring them or taking care of those needs, if they're on their own, they may find it difficult to find somebody great. Not surprising, I see there that 47% have a loose referral arrangement with a financial advisor. It's certainly something that I see a lot in the marketplace. 29% with planning in-house, that's great. For those of you in that basket, you're probably only going to see a few slight changes in the way that you're going to provide advice to your clients and how you differentiate between what the accountant says and what the planner says in-house. Interesting. What are you seeing there, Scott?
Thanks, Sue, and hello, everybody. Look, I too sort of feel very strongly about the loose arrangement that accountants have. My concern is that where it's a loose arrangement rather than a little more systemised, that clients can slip through the cracks. The easiest example I can think of is insurances, where perhaps some clients are being referred to get proper insurances in place, and others just don't have that. And I think we've all sort of seen examples where something untoward has happened to a client and there just hasn't been adequate insurance cover in place. So over time, what I'd like to see is these loose arrangements sort of perhaps a little more systemised, such that all clients sort of get access to the financial services needs that they have.
So let's look now. Thanks, Scott and Sue, for commenting on that, and thanks everyone for participating. We'll have one more poll later. So let's look now at what accountants can and can't discuss post-July 2016. So with a snapshot of FOFA in terms of who, what, when, how, why, and the implications around self-managed super. Over to you, Scott.
Thanks, Michael. I'll take that one. So essentially, I think it's accountants in practice who really have to sit up and take notice of this. There are some changes to the current situation with some legislation being repealed and other legislation coming in. So the what is really terrifically important to accountants. It talks about what you can and you can't advise your clients on. I think historically accountants have sort of operated in a world where they've interpreted it as a little bit of grey, or in actual fact I don't think there has been that degree of greyness. There's been a number of conversations around the country, I'm sure, in accountants' offices, whereby people preface the remarks by saying, well, strictly speaking, I can't advise you on this. Well, I think those sorts of conversations will go unless accountants actually sort of embrace the new legislation and get licensed, and we'll talk about that in a moment. In terms of the how, it's all in the corporations legislation, which, if you're an insomniac, I recommend reading that, as I was reading it last night in preparation for today. It's really quite complex in parts, but I think what we'll be looking at today is how we can simplify that so you have a clear plan of attack. The when is very important. The legislators have given quite a lot of consideration to accounts to give 3 years from July last year through to the end of June 2016 to get ready for this legislation. And whilst it might seem like a long time, as we'll see with the timeline a little bit later, you actually need to sort of get going with this in order to be ready. So I think that's sort of a quick overview. The why is it just relates to the way in which you want to work your accounting firm going forward.
So in terms of the major implications, Scott, around the pain and the gain here.
Yes, thanks, Michael. And what I might sort of add is I think, sort of harking back to the previous slide, is accountants who are working actively in the self-managed super fund area, I think this whole FOFA legislation is particularly relevant, and by and large accountants dealing in that area will end up getting licensed. So in terms of the pain, I think there's the whole aspect of having to sort of take your focus away from the here and now. And accountants, as we know, are sort of incredibly busy sort of looking after a myriad of deadlines and commitments for their clients, to actually have to contemplate sort of new procedures, getting licensed, undertaking education, and simply becoming familiar with the new requirements. All of that is I think, going to be a challenge that needs to be accommodated in the busy world of an accountant. I am an optimist by nature, and I like to sort of think that there are opportunities here as well. I think it's a great chance to review what your value proposition is for your clients, where you sort of see yourself in the market, what your clients' needs are, and in particular whether there's an opportunity for you to take a greater role in looking after your clients. It's a matter of opinion, but I have some views that as we increasingly sort of press on in this internet-driven world, where clients are becoming very price savvy and internet conscious, that sort of the value of simply doing someone's tax will actually be depreciated, and if an accountant can replace or perhaps sort of supplement that sort of tax work with higher value services where clients actually sort of see tangible benefit, that there's an opportunity to reposition your firm slightly differently to how it's currently positioned. Sue, do you have anything to add to that?
No, look, I'd certainly agree with you that it's a great opportunity. We accountants share a very busy timeline that they have with financial planners. I don't think there's anybody in practice at the moment that says they've got spare time on their hands. So I think it's about making smart decisions in a way that the firm is going to be able to handle. I do see significant evolution already happening in accounting practices. I think you're bang on there. Commoditised services such as just simple tax returns are not necessarily going to be the basis for the future of the accounting practice. Doesn't necessarily mean that they need to provide planning in-house, but I think having a great solution for it is certainly going to be the answer, which is a great segue to what we're talking about next.
Okay, Sue, run us through the options, the first few, and then Scott will polish off on this topic.
Sure. So there are a number of options that accountants have at the moment, and it's important to make a good consideration of each of these so that you have time to implement what you're going to do between now and the 30th of June 2016, because as much as that seems like a long way away, it's not. It'll be on you before you know it. So I'll just touch on the different options that you've got. The first one we have there on screen is referring clients on that have financial services needs. Now this is where you would have a relationship with a financial advisor that's external to your firm. And whenever you identify that the client has needs for financial advice, you refer them on to that external party. Now, that relationship can vary in its intensity. I know some practices that have an external financial advisor that actually comes in and works in their office one day a week, so they ensure that they have somebody still within their office to be able to speak with their clients, or it might be strictly at arm's length. But it's really important to be able to identify that opportunity to be able to refer on to another advisor who handles all of the compliance and the advice, training and education aspect, and then they provide that advice on behalf of the accountant. The next option is to conduct a joint venture with a third party capable of providing the advice. And when we say joint venture, we mean that you have an arrangement where you split income. It may be that you actually share the ownership of that client book after you've made that referral to the advisor. So that generally does require a much deeper relationship, somebody that you really trust, somebody that you respect, and you understand that the way that they provide their advice and their services, and you then have a very firm written understanding of how that relationship is going to work. We have heard in the past some accountants are concerned about missing out on the opportunity for providing advice and or the revenue generating opportunity of that introduction. And so a joint venture can be a way to solve that issue without necessarily having to have the accountant actually getting that qualification. The third point being you can become an authorised rep yourself of an arm's length licensee. And so what this means is that either you as the accountant or someone within your firm becomes qualified as a financial advisor with the studies, and you become licensed, and you get that license from an arm's length licensee. And that's Scott's representing one of those at the moment from Fortnum, and he's going to talk to you about some of those options. There are a number of different licensees in the marketplace that are creating offers or have created offers specifically for accountants. And the concept here is essentially you're outsourcing the compliance and the licensee obligations to an external third party that specialises just in that area. So you would pay them a fee to access that license. They would provide your compliance and audit requirements and give you support to be able to run the business. Option 4, and we're going to touch a little bit more on these, and if there's any questions on any of them, please feel free to ask. Option 4, somebody else in your firm, so it's not necessarily the accountant sitting in on this webinar or the accountant that provides the tax advice, but somebody else in your firm becomes an authorised representative of that licensee. And so it's somebody sitting within your practice. You can easily just grab them out of their office, sit them in front of your client or make the introduction, and then they have another meeting later. Option 5 is obtaining your own license and using the option for the limited accountant's license, and that means you directly going and getting the license within your firm. That will require a number of different obligations, which Scott's going to touch on. The other option is very similar, but instead of just getting the limited license, you get the full license, which means that you or your representatives within your firm are able to provide full scope financial advice. And the other one is a combination of any or all of the above, which, Scott, you might have something to add about that.
Yes, thanks, Sue. I think this is all about making informed choices, and your firm's requirements are going to evolve over time. For example, your firm might become bigger, you might undergo a merger, or it may be that your clients simply require more services from you or to be helped in different ways. Another possibility is that if, say, you've been on a limited license, you may have some team members who may really take a liking to this area, and you might actually progress to a full license. Equally, you might decide that no, it's in your best interest to revert more to being the traditional accounting and to refer clients to other specialists in the area. So at any point in time, you could be operating a combination of the above, but as I say, it's a matter of being informed and making the choices that's right for your firm at that time.
Another example that we're starting to see too, Scott, I think is having the limited license for the accountants within the practice, but where they have a client with a more substantial need for advice, then they'll refer it on to an advisor that takes care of the rest of the advice. So the accountant will still provide their advice on the self-managed super fund in that limited license scope, and then when they identify further needs, then they refer it on to someone either in-house or externally.
I think that's a great solution, actually, in my experience, and certainly going back to my days in practice. I think a lot of accountants feel very comfortable and confident in the area of the strategy, but when it comes time to actually sort of selecting products and sort of, say, implementing insurance solutions, then that's when they're happy to hand over to somebody who works in that area all the time.
Let's run through now the decision-making timeline. Sue.
Okay, thanks, MC. So what we've got here is the timeline. And as I say, on the right-hand side of the screen there, July 1st, 2016 seems like a really long time away. When we look at all of the different decisions and actions that you need to take between now and then, I think you're going to feel by the end of these points that that timeline's actually shrunken and it's a lot shorter. So what we've got on this slide is a number of different decision-making points and activities that you're going to need to do. And I'm not putting we're not going to put up any more dates on there because the timing of each of these things is going to vary significantly depending upon the decisions that you make within the practice. So I think the first thing that's really important, and it's probably one of the things that you're doing right now, which is why you're in this webinar, and that is assess your business model options. So really having a look at the different options that are out there in the marketplace, deciding on what are the ones that might be most suited to you. And I would suggest at this point you actually make a short list because there's a couple of next points on the timeline that you're going to want to do before making that final decision on the option that you're going to go with to start with. So I think compare providers, that's probably a great one that you can talk to Scott. Once you've got your short list of options that you're going to consider, the next thing is start looking around for people that can help you with that.
Thanks, Sue. Yes, I agree the business model is a starting point. Decision making becomes so much easier when you have clarity in terms of how you're going to attack this issue. One of the things that you'll find as you venture further into the world of financial services is that you're most likely going to need to align yourself with friendly third parties with complementary skills. So regardless of what particular business model you choose, you'll almost certainly be talking to people who have expertise in that area. So even if you decide to take your own license, then there are people actually out there who are really good at helping people to set up their own license. Or if you're going to be a licensee through a third party, well, they will provide a range of different options that you'll need to determine as to what will actually be a good fit for your firm. So welcome to the world of financial services, and it's a matter of leveraging support with third parties that will provide those skills and knowledge that currently you don't have in-house.
Absolutely. I think on that point too, Scott, you really break it down into those three areas. If you're going to decide to get your own license, or if on your shortlist you have the option of getting licensed with your firm, you want to be either looking at the different licensees that are available to you and having a look at the offers, having a look at everything that's incorporated in what they're providing. So this is one of those instances where comparing purely on price is probably not the best option, because there are a number of different providers out there, and they all have a different value proposition. They all have different services that they're going to provide. So looking at what it costs you for those, and then what you're going to get in return to make a balanced choice, and then comparing that to doing it all in-house. So yeah, if you're using those outsourced providers, that's really important. And if you want to start or continue a referral relationship, there is absolutely no shortage of financial advisors out there who are very good at what they do, and they are seeking to have referral relationships with accountants. So before you decide on actually which option you're going to take, which is the third point that we have there, once you've considered all of those different providers and people that you might be working with, then you can make a far better informed choice about how you're going to move forward. And particularly if you're going to do that double option of having a limited license yourself, so that you continue to provide self-managed super fund advice and bringing in an external party or having a referral relationship. By the way, actually one option that we only touched on very briefly is another alternative is if you have a really good relationship with another advisor that's going to be your referral partner, they may actually be able to sub-authorise you under their if they have a corporate authorised agreement, they actually may be able to sub-authorise you. And equally, if you're going to talk to someone like Scott, if you're going to have an external licensee that you get licensed through, they may be able to introduce you to other advisors within their network that will be happy to take on those more in-depth advice clients if you're choosing to refer them on. It's all about who you know, isn't it?
Yes. One of the things that I think invariably accounts are going to have to face up to in this whole new world is undertaking some financial services studies. So for those of you who haven't actually had to undergo a course of formal study and indeed assessment, this might sort of take a little bit of readjusting. Another aspect that I think is quite important is to be able to fit those studies in amongst your really busy workload, the expectations of your family, when you're going to take holidays, etc. So I think between now and 30 June 2016, if you identify what studies you need to undertake and how long they're actually going to go for. One other aspect that I'd particularly like to highlight is that oils ain't oils. You can line up for a course which is simply all over the web, where you don't actually have any client face-to-face contact, and you can actually sort of have classroom situations, or indeed sort of something that perhaps is organised in-house for your firm if you have enough people to be trained. For me, when I was going through my financial services studies, which I did part-time, and various other courses, I found that the interaction with people was really helpful to the way I learn. So don't necessarily sort of limit your thinking just to internet-based courses or going for the lowest price. Also think sort of very carefully in terms of the support that's provided, resources that you might get, etc. In terms of the courses that you might need to do, it depends upon what sort of things that you've come up with in your business model. For some, it will be simply a matter of doing some basic financial services studies, and you'll hear quite often the term RG 146, which is an abbreviation of Regulation 146, that prescribes sort of some basic financial services studies. Those of you who are practicing actively in self-managed super funds, you might well find that you'll also need to do some studies in this particular area, and that's notwithstanding the fact that you might have been practicing in self-managed super funds for many, many years. Particularly if you're going with an external licensee, you might find that they'll actually want a bit of paper to sort of show that you've actually completed the course. For me, if I'm actually going to do any part-time study, I actually want to learn something, so it's not necessarily the shortest course that you might actually select. Sue, do you have any further comments on the studies?
Yeah, I'd certainly agree with you. It's funny, I have some conversations with accountants particularly that are saying, look, I just need to tick the box. I'm just doing this because the rules are changing. I just need to tick the box and do it the shortest, fastest way. And I think that's certainly missing a massive opportunity. I said right at the outset of this webinar, financial advice is an incredibly important aspect of a person's life, and it's incredibly empowering to people when they get great advice and they can make great decisions and get great assistance in achieving the lifestyle that they want. Accountants play a really important role in that already in the work that they do, and the financial advice aspect is different to what they have been doing purely in an accounting role. And I'm not saying that to offend anybody, but it is a very different scope and framework. So to take on the studies just to tick a box from a regulatory perspective, I think misses a massive opportunity to add true value to your clients, because when you do that study and do it well, and you know, I agree with you, Scott, I see so many people get a lot more out of it when they have human interaction, the ability to discuss the concepts that they're covering. I think that can mean a great deal of job satisfaction and also support that you provide to your clients. So look, the next point we have up there is once you've made your decision on which way you're going to go, once you've completed your extra studies and you can tick that box and hopefully tick it really well, then the next option is actually to apply for the license, regardless of whether you choose to go direct and get your own license or whether you're going to outsource that and go through a licensee. There is still a process that you need to go through for them to actually grant you your license. So Scott, with Fortnum, for example, how long does it take for you to get somebody through your checks and balances to actually issue their license when they apply through you?
Yes, that's a good question, Sue. There's a lot of moving parts, but I think sort of probably what I'd like to convey is the application process works a lot more smoothly where you've got all your documentation together. So if you're able to sort of put together your proof of your studies, sort of submit the sort of identification requirements, be aware that there are things like police checks that are also done. So if you've got all your documentation together, the whole process can happen reasonably quickly to get through. But if we sort of have to chase you for missing information, then the process actually sort of can drag on to the point where everyone's thoroughly sick of it. That becomes more and more relevant, of course, as we sort of get towards the July deadline, or it may be that sort of you've actually sort of made some commitments to clients in the meantime. So just sort of be really organised with the paperwork, I think, is the key message.
When you say relatively quickly, so if someone had all of their paperwork together and everything that you needed, how long? I suppose it does depend on how many you've got applying at the same time, but roughly speaking, we're talking weeks,
yes.
2 weeks, a month?
Look, I think 4 to 6 weeks would be a reasonable expectation.
Okay. Yeah, okay. And I think the alternative is if you're having someone assist you to apply directly to ASIC and get your own license. And certainly I would absolutely recommend you don't try it yourself. If you do look on the ASIC website, there are guides and support to help you to do it, and I'd say you're a very brave person to take that on yourself. There are outsourced providers that will help you with that process. They've got a lot of templated information that you can tap into, and I'm told that it can take anywhere between 2 to 3 months to get that happening. Again, provided you've got the information that they require to submit.
Yes. I might just add there, Sue.
Sure.
Regardless of whether you're a member of the Institute or the CPAs, a combined project was undertaken, and I think the two bodies between them have produced this quite a large document, it might be 60 or more pages, to prove how simple it is to apply for your own license, which I think is rather ironic.
Yeah, yes, bravery indeed. And look, the next thing we have there on the timeline is determining the advice procedures and training your staff. And look, these can actually happen concurrently with applying for the license. And this is a step that's going to be required regardless of which option you take. So if I start from the option of outsourcing the advice and having a referral party, you want to make sure that you understand the way that they're going to provide advice to your clients and at what points are they going to feed back information to you as the accountant. So important that your in-house staff understand that relationship and understand how you're going to get the information, how you're going to make the referral to the financial advisor, and then how you're going to get information back on understanding the advice that they're providing. And I think it's also really important to make sure that you tick the privacy boxes, obviously, to ensure that the client is happy for you to share information. But often when a financial advice a plan is written for a client, there are a number of recommendations in there that do have tax implications. So closing that feedback loop and making sure that whatever advice is implemented, you understand, so that you can ensure you can make sure the client gets the tax benefits from any of that advice. If you're then going through an external licensee and you're going to start providing that advice in-house, then you've obviously got a lot more work to do internally to determine your advice procedures. Now, we've put there procedures, so this is everything from who handles which piece of paperwork and when you sign off on a fact find and when you create the statements of advice and if you're going to use paraplanning and when you get the client to sign the authority to proceed and implementation documentation to lodge investments. That's all the back office process thing that you need to get your head around and train your staff in how to do. But there's also the front facing, there's also the client facing aspects, and those of you who are fans of MC will know a lot about this, about it's important to be able to define the value proposition. What is it that you're telling your clients that you're going to be able to take care of? How are you communicating that to them? And how are you constructing your interaction with them so that you can take your relationship to another level and move your advice away from compliance and tax and into more of that forward-looking investment, risk advice, financial advice to help them work towards their goals. And of course, then the last option is, if you're getting your own license, then you're going to have another layer of procedures required so that you can make sure that you internally are taking care of all the compliance obligations and reporting directly to ASIC. So depending on the business model you choose, there's going to be anywhere from a very simple to an incredibly significant amount of retraining and procedural work that you're going to need to do so your staff are able to deliver with you on the promises that you're going to be making to your client. And in that regard, the licensee that you choose may well be able to help you if you're choosing to either take a licensee that doesn't provide business support or go your own route, then that would be someone like Elixir would step in and we'd be able to help you to create that aspect.
And I'm seeing, sorry, Sue, you go.
No, I was going to say anything else that you'd add to that, Scott, at that point before the big D-Day?
Yes, I would. I think accountants tend to focus on deadlines, and what I'd like to sort of suggest is that you move your deadline forward, because you might have been thinking, well, so long as we're licensed by the 30th of June 2016, we'll be okay. But in actual fact, maybe that date should be April Fool's Day 2016, which will give you that breathing space to put in the procedures, to do some dummy runs to make sure that you're actually able to implement on the promises and to deliver financial advice in a way in which it complies with the legislation by the time 1st of July 2016 comes around.
Yeah. We've had a lot of questions come through around business model. I'm just looking over here at the question panel. And criteria for choosing business model, and we'll come to that in question times. But now it's time for us to do the second and final poll. Which of the following are concerns for you?
Wow, okay, so I'm guessing there's quite a few people that have added multiple options in there. So decision on your business model, probably not surprising that that's the greatest concern for people at the moment. And I'm glad we have done really well for time. We wanted to ensure that we had plenty of time to answer questions at the end of this. So those of you who are considering any of these things, it's such a big topic. It was very difficult for Scott and I to actually try and keep to a short space of time. So there's so many different levels and layers of things we haven't covered. So we'll absolutely continue to answer questions on these because they are some significant decisions. Scott, is there anything else, anything you're noticing there you want to point out?
I think it's actually a pretty logical set of steps, isn't it? So you get the business model determined. Most people are anticipating they'll need to get the study done and then select the license provider. It's all a pretty dry argument on the license provider if you don't actually have the study. So, look, I think that's pretty logical, and I think I'd be thinking along similar lines if I was still in practice.
And in terms of the business model, that's one of our pet topics at Paradox, because even just more broadly than your financial services business model, just looking at your entire advisory firm, some of the mistakes that people can make often is spreading themselves too widely, too thin, as I've heard it put once, diversifying. So you can actually succeed by doing less. And just make sure you're very focused and you go inch wide, mile deep in what it is that you do and don't dabble.
Yeah, it's a great point, MC, and it's something that we talk about fairly often when helping accountants to make this decision. It may well be that they are absolutely capable of providing advice in terms of a knowledge perspective and an intelligence perspective, and they've just got to make that decision about what do they want to be, where does their focus, best placed in their firm. I've seen it so many times where an accounting firm will have financial advice in-house and they'll have an accountant that wears two hats. So they'll be the advisor some of the time and they'll also continue to provide accounting advice. And we often see that they just naturally tend to lean towards the one that they prefer the most. And so one of those two roles becomes depleted and they don't do it as well as otherwise. So you're absolutely right, picking the best option for them to do really well at. It doesn't mean that they're not capable of being the advisor or continuing to be an accountant. They're just making a risk-based decision on the opportunity cost of spreading their focus too thinly.
So I think the decision around business model will stem in a large part from an analysis of the firm's own strengths and weaknesses.
Definitely.
And having self-awareness, I suppose, of what they do well and what they don't do well, rather than trying to stretch preferences and skill sets beyond really what the natural focus is. The business model can be looked at from multiple multiple perspectives. Let's now step through the action steps.
Yeah, look, it really comes down to getting active, making a decision, taking steps. So I congratulate everybody for attending this webinar, because if this is your first step, you're certainly heading in the right direction. But you want to form a policy on how you're going to handle FOFA and how you're going to address this. You definitely want to appoint a champion, or even if your firm is big enough, a committee, to be able to look at all of the different options that you have and make informed decision. I mean, if you're a multi-partner firm, you're going to want to ensure that you're bringing everybody along on the journey so you can make informed decisions. I will say, if you're going to do this by committee, be very, very clear on whose roles are what in the discovery process, and then get people to report back together to make decisions. Often I find when people address issues by committee, they think somebody else is going to be doing something, and there are invariably jobs that get left out. And then prepare a timeline of what you're going to do and when your decisions are going to be made. And you may even use the timeline that was on that slide. Happy for you to do that. The dates that you put across the top are going to vary with your options. Become informed. Again, great for attending these sessions. Look into as much information as you possibly can do to find out the difference in the options that you have. There is plenty of information available. If you haven't already, then get in touch with your accounting body, because as Scott said, they've put together some really helpful information to be able to make some decisions. Complete the education, determine what you're going to do and when you're going to do it, and do the courses. And then, of course, considering the other elements that we've talked about today, and make sure that you have all of those involved, even from the perspective of induction processes for your staff. You're utilising software, because there's going to be different software requirements for what you've used purely for your accounting practice, learning that, installing new processes, the whole gambit. And then, of course, there's understanding the product range in the investment and insurance space. So all of that takes time.
Just before we go to question time, we'll just explain that from today, some additional resources that are available for everyone. Scott's making available a complimentary paper, The 7 Mistakes Accountants Make, about FOFA. Sue, you're being very generous. You're making available a business coaching session. So you have a team of coaches around Australia, and you're going to offer a complimentary one-on-one session. By the sounds of things, some of that might be around business model.
Yeah, I would say so. And I'll clarify that we do have coaches in Sydney, Brisbane, Perth, and Melbourne. I will just clarify, though, the complimentary option we have, depending on where you're located, that may be by online hookup like this or telephone conversation. But we're more than happy to share a half-hour consultation with anybody that chooses to off the back of the webinar.
The option from Paradox, if you're new to us, something that will give you an insight to our approach to helping firms essentially be more meaningful to their clients and to add more value and to learn how to sell the optional value-add future-focused services that you're capable of providing, is an ebook that we have, The True Advisor. Everyone's familiar with the phrase, the trusted advisor, but you'll learn in this ebook why being trusted is not enough for you to cross the value-add chasm. So let's now go through the questions. I've shortlisted ones that people entered when they registered, and I'll also bring up on my other screen here other questions that were asked. Now, around communication with clients, Sue, there's a question here from Kerry, based in Canberra. How to make it clear to clients what we can and, more importantly, what we cannot advise them on.
This is a great question, Kerry. Yeah, look, I think the first thing is obviously everybody within the firm needs to be clear on what they can and can't do. I think when you're talking from a client's perspective, consider the fact that they actually really don't care about what ASIC says. They don't care, as you know, about what the regulations are. They have a trusted relationship with you. So you will know the ins and outs of how far into detail you're able to go. But if you get to a point where you're then going to introduce the client to somebody else or refer them to somebody else, I think from the client's perspective, it's more important to them to know that they're going to get their questions answered by somebody that they trust. And if they trust you and you're the one putting them on to this expert, then that trust is going to be inferred. Sure, it's an easy out to be able to say, well, ASIC's changed the rules and now I have to stop talking to you about that, because that still doesn't solve the need that the client has. So I think being really clear yourself and knowing where those grey areas are as you start talking about a self-managed super fund, and then realise that the rules are changed now and you're going to have to take a different tack in terms of solving that problem for the client.
I think it comes back to business model. Once you have clarity about how you're actually going to be helping your clients across all of their financial services requirements, then it becomes very easy. So if your model is that you're going to stick to being a really great accountant and to refer, then it's a matter of actually sort of setting expectations with clients that there'll be sort of more joint meetings that you have where you actually sort of...
folks.
Is that you, Sue?
Yes, Sue's partially coming back in.
Okay.
We'll have to send some feedback to Citrix after this webinar.
Right. Yeah. I'll keep going. So if the model is referring, then it's to set the expectation of joint meetings. Equally, for example, if your model is to have an in-house financial planner, again, sort of setting that expectation with clients. Along the way, it'll be a matter of getting clients used to different letterhead that you might be using, or indeed a different business name or different signage. There might be different brochures in your reception. So I think sort of just a general client education process will be very, very helpful. And all the while just sort of explaining to clients that, look, we've had a good look at what we're doing. We're keen to sort of be involved with you across a broad range of your financial requirements, and this is actually how we're going to do it. Clients are actually sort of pretty savvy. Once they actually sort of like know who's on the team, they're pretty sort of clever in terms of working out who they should be talking to about what issue. So I think if you communicate it clearly in terms of how you're going to help them, where you personally will stop. Hi, Sue. Welcome back.
Welcome back. Did you go out and get a coffee, did you?
I did. I just took the surfboard down, went for a surf at the beach.
Welcome back.
Yeah, look, Mike, I might pull it up there. I think just
yeah, because we've got 8 minutes left, and we've got about another 6 or so questions. What we can do too, by the way, is we can continue this conversation. I'll email everyone a link to a LinkedIn group where we can continue to answer the ones that we don't get to. Just a related question. Kerry asked another question live today about there was a recent case of an accountant being, and let's not get lost in a rabbit warren here around the liability side, though clearly it's important. An accountant being sued for making a referral to a financial planner who did the wrong thing. How does that figure into the options around business model? What sort of mitigation is there around that when you're referring?
I haven't heard of that case. Scott, are you aware of that case?
No, I'm not, and that is perhaps unfortunate in terms of the timing. In one regard, sort of for accountants who are sort of viewing this whole financial services area with a bit of trepidation. But I think what it does actually underline is the importance of taking ownership. So if you have decided to refer to a financial planner, be it in-house or externally, what's really important is that you have confidence in what they're doing. And I think that's really the best way of achieving that is actually to sit down sort of off camera, away from the clients, and work through typical client scenarios to sort of get an agreed combined approach in terms of how you're going to tackle solutions. And that's the opportunity to sort of just thrash out sort of where there might be professional differences of opinion. So at the end of the day, when you're sort of together sitting in front of the client, there's just great clarity and confidence that you know what's going to happen. So I think that will sort of help allay fears and even better sort of give a very positive experience for the client. Sue, do you have anything to add to that?
No, I think you bang on the money of being really clear on what it is you're providing. Look, I think in terms of the financial advice, if it's being provided by an external party that's a licensed advisor, they are taking on the compliance risk of that, if you like, provided it's very clear to the client who it is that's actually providing that advice. I would be surprised that making an introduction to a licensed third party could create a legal issue. But from a trust issue that you have, you certainly want to know that not only do you trust the advisor that you're recommending, that they're a great person, but also that they tick all about boxes around their professional qualifications and credentials and experience and licensing.
Well, Sue, flowing on from that, Mark from Melbourne asked the question, how do you find the right cultural fit for partnerships?
Yeah, great question. So I just touched on those technical issues. So you want to know, and don't be afraid to ask a gazillion questions of anybody that you're considering referring clients to. So you want to know their level of expertise and their education and their licensing requirements. You may even ask them about their history of complaints and their audit background, which will tell you a little bit about the quality of advice that they're providing, depending on how good their audit provider is. But from a cultural fit, this does come down to actually getting to know the person. So do spend time with them. And I would say even spend time to talk about issues that aren't directly related to the referral relationship that you're going to have. So things like, why is it that you've gone into this business? Why are you an advisor? What are your, I guess, personal values? And how do you manage your own business? What's the culture within your team? To what degree do you provide advice and relationships with your clients, to get a really good feel for those, I guess, intangible things that are all covered by this concept of culture. Because if the client gets a totally different experience and feel when they walk into the advice practice or are taking care of someone from that practice versus you, there may be a little bit of a disconnect there. But largely, if you're comfortable with the culture and the values of the advisor that you're referring to, you'll probably find that your clients will be as well. So take the conversation just beyond technical.
Matt from Brisbane's asked, what are the typical referral fees from financial planners to accountants? Are there any?
Okay. Yeah, great question.
Uh-oh. You're frozen.
We lost Sue, have we?
It's paused again. Must be the
Right.
interwebs today. So,
Yeah.
Scott, while we're waiting for Sue to
Sue.
unfreeze, what's your understanding around typical referral fees from financial planners to accountants?
Yes. Okay. Well, look, I guess there are two aspects to this, Michael, and I will be brief. There's kind of like traditional think, where the referrals are all one way from the accountant to the planner, and historically there has been sort of some fees which have actually changed hands, where the financial advisor, excuse me, has given up part of their income to give to the accountant, and they range from sort of say 10% through to about 30%. I've heard higher fees, but that concerns me that there isn't enough revenue for the financial planner to do a good job on the clients that the accountant has referred. But to my way of thinking, increasingly the relationships that accountants are forging with financial planners, it's just as likely that the financial planner will be referring to the accountant, in which case I think an enlightened view would be that actually no money changes hands, but the two parties actually sort of work very closely on how they can actually collaborate better and build each other's businesses, so that sort of like the focus is on actually sort of maybe additional services that the accountant might provide, rather than actually sort of like paying them for the referral. And I think increasingly as the focus evolves into not so much sort of product-related sales, but the advice that both the accountant and planner are providing, that there's probably less sort of grounds to be looking at a referral revenue splitting arrangement. But it comes down to the individual circumstances. Of course, there are still sort of some of those other generation arrangements in place, and they work well. So I think open communication, letting people know what your expectations are and what you'll do in return, will be very helpful in these situations.
And Scott, Tim's from Sunbury, is it possible, or will it be possible, to have joint venture arrangements with multiple financial planning firms, for example, one for LRBAs, another for investments?
Look, anything's possible, Michael. What you have to be really sort of switched on to is to make sure that all of the clients' financial services needs are met. And the more providers that you have in the mix, the more complicated things become. Yes, I can certainly envisage a situation, say, for example, where you have a risk specialist who's sort of very, very good in insurances, might be sort of looking after that app, and sort of have an investment person who has complementary skills. But where you're actually dealing with a range of, say, general practitioner financial advisors, and you've got arrangements with multiple advisors, then it sort of becomes sort of very problematic in my experience, and that's where sort of clients can actually end up slipping through the cracks, as I mentioned before, and they don't actually get all the services that other clients do. And I think that that's a danger for accounting firms, sort of where some clients have received full service and others haven't, then that actually sort of exposes the firm to a very valid criticism that sort of some clients are sort of being treated as second-class citizens. So be very clear on your model, but I think the more providers you've got in the mix, the more complicated you're going to make life for yourself.
I think that's some wise advice around there, what's possible versus what's prudent. Now, Scott, there's a question that's been asked by Emmanuel. He's asked it when he registered, and he's also asked it live today, so we can't not answer it. And it's about explaining the difference between Regulation 7129A, the exemption ends on 30 June 2016, and 7129, the exemption remaining, and the impact for public practices. So if you want to re-explain that question to everyone and then just step through that in, say, a minute if that's possible, and we can answer things in more detail on the LinkedIn group later.
Yes, for sure. Very briefly, 7.1.29 refers to what I'd call traditional accounting services. So, for example, preparation of financial reports, auditing, sort of advice on taxation issues, advice in relation to compliance. Those things have always been the domain of accountants, and they will continue. What's actually changing is the withdrawal of 7.1.29 capital A, which really revolves around the ability of an accountant to recommend that a client establish a self-managed superannuation fund. So that will be actually really very sort of significant for accountants who are working quite closely in that area. Where you actually take that away and you're left with 7.1.29, accountants going forward will have to make it very clear to their clients that A, they're just advising on things like taxation matters, and that their client should be seeking advice from a licensed financial planner on anything to do with what's defined as financial services. So that's the short answer, Michael. I'll leave it at that in the interest of time.
Okay, thank you, Scott. And I'm just now looking over at the list of questions that have come through live. We've got some specific ones. A question from David. Can you give a range of fees you could expect to be charged by a licensee under options 3 and 4, which was the earlier slide? So 3 was become an authorised representative yourself of an arm's length licensee, and 4, someone else in your firm, a partner or an employee, becomes an authorised representative. So David's question is, can you give a range of fees you could expect to be charged by a licensee under options 3 and 4?
Yes, look, I think between $5,000 and $15,000 will be about the mark. There are a range of variables, including whether professional indemnity insurance is included or whether you organise that separately, what you're actually going to be providing, whether it includes self-managed super fund advice or indeed credit licensing advice as well. Typically, the more complex the advice, the more that you can expect to pay in fees. But as Sue mentioned earlier, it's really very important to take a full picture because like with some licensees, they'll provide more support by way of, say, templates and procedures and training and induction. So it's very important that you're comparing apples with apples, and it's not just strictly on the dollars, but hopefully that's a ballpark indication that will suffice for now.
Rebecca has shared that she's seen costs on those fees between $500 a month and $2,000 a month. So again, clearly, even just on dollars, it's not apples with apples. And each of the providers themselves has their own value proposition, don't they, in terms of what they're bringing to the table for you?
Correct.
They'll also generally vary depending on the number of advisors licensed in the firm. So often there's a minimum fee for the first person being licensed, and then there may be a slightly reduced fee if there are multiple for the next couple of advisors in the practice. But yeah, there's such a big range.
Okay, now Linda has asked, what is the scope of advice for a limited license? Would you be able to provide advice on the following for SMSFs? And then she must have hit enter, and she's created one here. E.g., setting up a fund, moving assets already owned by members into the fund, purchase, business, real property, contribution advice, pensions, investment strategy. So this is the question around scope of advice for a limited license.
Look,
Scott, I'll let you take that one.
Yes. I think, Linda, you're clearly right into the grey area of those examples you mentioned. Some would be okay within a limited license, and yet others wouldn't be. So to advise the client to set up a self-managed super fund, big tick with that. To be advising somebody on moving from an external fund into self-managed super fund, I think I'd be quite wary about that, particularly as the existing fund has its own investment returns and profiles, etc. Where you're actually advising on things which are very specific products, then that actually requires a full license. And I think you also need to be very careful in terms of if that super fund actually had insurance all aligned with it, to make sure that the client had complementary insurance in a self-managed super fund. That's the sort of thing that I'd actually be sort of aligning yourself with a fully licensed planner to ensure that all the I's are dotted and the T's are crossed. There is sort of some very good information that the accounting bodies have put out with some very specific scenarios that will be worthwhile looking at to sort of get a more complete picture of this really important issue.
Thank you, Scott. Rebecca's asked, if we get our licence early, are we still able to utilise the accountant's exemption, or do we have to comply with the new rules straight away?
Well, I think it's a matter of sort of making your bed and lying in it. If you're going to be licensed, I would sort of think that they're don't look at it as a negative. Look at it as a great positive that you'll be able to advise clients across a broader range of areas. So I would be sort of wouldn't be relying on the accountant's exemption. I'd be flexing your muscles in terms of what else you're empowered to do.
Great advice. David's asked, where does the advice start and stop in terms of not being licensed? Just providing tax advice on implications of starting pensions, recontribution strategies, etc., and then disclaim with seek advice from licensed planner, tax is only one aspect, etc. Is this practical? That is, no license required at all.
Yes, I think that's really right on the money. Your clients want you as your accountant to take a really leading role in their financial well-being. What they don't want is for you to be sort of like seemingly sort of ducking and weaving behind disclaimers and sort of not really sort of tackling the key issues. So I think if sort of those sorts of areas are sort of part of your practice, then step up, get licensed so that you can fully participate.
All right.
Absolutely agree.
Oh, do you want to add to that, Sue?
Yeah, no, look, I'd agree with that. Or have a close relationship so that it's not simply, I can tell you this much, wink, but then I have to stop. That you definitely have a solution to be able to help advisors actually, help your clients actually solve that need.
And I think that really clears up that grey area for clients as well as the advisors. Something I've seen some firms do very, very well at the start of a relationship with a client is to have a visual diagram that shows the client and the other advisors that are within the firm and outside the firm, and explaining, here's the team that's supporting you and what each does in terms of, expect to hear from me on this, you'll be supported by Sally on this, we work with Sam who's in this organisation on that, so the client can have a takeaway to go, right, cool. I'm not just supported by one person. There's actually a team of advisors who are each specialists in their area who really know their own domain well, rather than leave it all fuzzy and open to interpretation over time.
Yeah, with good communication, you can turn it into a positive, which it is.
Absolutely it is. Now, a couple of quick ones to finish off with. What are the specific courses recommended by Sue and Scott? Peter's asked that. Any specific courses, or I suppose implied in that, any providers you're happy to give a plug to? I know one that I'll mention.
Yeah, look, there are courses and courses. Some are provided by third parties. You might also, particularly if a member of the CPAs, you might also investigate what your own body is putting on for you.
So one provider that I've seen that I really like their culture is Pinnacle. Cara Edwards and her team there, because they give that good blend of online versus offline, actually getting into classroom situation, and their focus is on not just helping you get the qualification, but really making sure it's a quality process. So that's Pinnacle, who I've seen and respect. Now let's wrap up. I'm conscious that we've gone over time. One of the questions has been asked is, how can we get a copy, Rebecca asked, of the materials you mentioned before, which is a nice segue just to wrap up. So you'll be able to choose from getting more information from Scott, so the 7 mistakes accountants make about FOFA, a complimentary paper, And also you could choose to receive information from Elixir and then communicate about setting up the business coaching session. And likewise, you can tick the box to get more information from Paradox in terms of communicating and marketing and selling your additional services. And we have a complimentary ebook, The True Advisor. I'd like to thank everyone for joining us today and for persevering through a few little issues there with the technology. And I'd like to thank both Scott Charlton and Sue Viskovich, who have brought to bear today.
Thank you, MC.
You know, really, I think you shared the tip of the iceberg. There have been a lot of detailed questions that I'm sure you could run full-day, half-day workshops on any one of these questions, particularly around business models. So thanks for giving generously of your time today, Scott and Sue.
It's a pleasure.
Absolutely.
And look forward to seeing you at the next webinar that we host here at Practice Paradox. Bye for now.